There are many potential catalysts at this point in time which could lead to an unraveling. Nobody knows what will be the cause, but where there is risk, there is fragility, and where there is fragility, there will be failure. Right now, commercial property stands to lose the most. Iconic hotels, which have remained open for decades and more, have gone under. Retail properties are shutting down rapidly, and the prospects of returning to the previous state of business travel and general need for massive office towers has now been reduced. This should be front and center on everyone's radar going into 2021. You came here for the truth, so let me unveil that for you. Today we're going to talk about what's happening with the hotels, with the commercial real estate, but then I need to cover something. Those who stay into the second half of the video are going to get the real deal, because we're going to talk about what's happening with negative rates. I'm going to show you different countries that have gone into the negative. I'm going to give you the heat map associated with that. There's a lot in here, definitely. So let's get into it right away. Out of Bloomberg, unsold U.S. hotel rooms near 1 billion as lodging crisis deepens. So of course, right now we are seeing this one industry getting really taken out along with other forms of tourism, whether that's the cruises and the airlines and so on. Look, more than 962 million room nights have gone unsold through last week, and that's 46% more than all of last year. Based on current occupancy rates, the industry will pass 1 billion unsold rooms around Christmas, a deepening crisis for owners that may worsen before there's a recovery. In a normal year, vacant rooms are simply the cost of doing business in an industry that rents space by the night to travelers who sign annual leases or apartments on longer contracts for corporate offices. The occupancy rate for America's 5.3 million hotel rooms was 66% in 2019, okay? But just short of the record high. Even so, more than 650 million room nights went unsold. So you know right here that we are talking about way bigger numbers than what we have ever seen before. And that's not a prediction. I mean, anybody could have seen that months and months ago, that it's still going to be a problem at this point, even as we have more people traveling and that starts to pick up and everything. I do believe that it's not enough, because you're always going to have those empty rooms, as you can see with the stats right here. There's always empty rooms. You want to have as many of them packed in as possible. You want the maximum revenue, but if they're unable to get to the level which is paying the bills, well, of course, they have to shut down. The places where they're not getting enough people, not getting enough tourists, not getting enough business travelers, they'll be shutting those down. That's already happening here, and we're seeing a lot of these businesses starting to restructure their debt. They're trying to close down the ones that they can. They have been laying off people. We're noticing everything coming out here. But what's underlying all of that, as I mentioned every single time, is the fact that there has been now finally the understanding that we have these derivatives under this, and these derivatives, whether we're talking about the the CMBX, there's all these different ones, whether it's 9, whether it is 6, whether it's 11 or 10, there's all these different ones that I've really broken that down in previous videos. But you see that some of them are more likely to hold on to, let's say, the hotels. Other ones have the retail space, other ones are, and so on. So you look at all of these and see, well, we've got some serious problems. The 9 and the 6 are two that I've noticed definitely prominent problems there, but many of the others as well. It all depends on what happens and what we could see, but it could trigger that same type of event that we saw during the subprime crisis. Because remember, the subprime crisis, if you think about how much dollar value is associated with the subprime, it's really not that big. Although there was a lot of fraud, although there's a lot of schemes that were going on, it really wasn't that big, but it unfolded and started to bring up all that, the skeletons in the closet, or what was swept under the rug. So the same type of situation could absolutely happen here. Out of CNBC, they're referencing the pay scale index. Looking longer term, pay scale found median wages, when adjusted for inflation, actually declined 8.8% since 2006. And this is using the fake level of inflation rate, of course, but understand that even going by the statistics that they give us, look at the situation for the average person. Their wage is declining as time goes on. I've seen other statistics. I mean, it depends how you measure it and so on, but you just look at it and it's either flat. I've seen some of those. I have seen others that have been going down. In a nominal sense, you look at it, okay, sure, it's kind of like this slow and steady rise up, but look at what's happening with debt. It's going through the roof. The way that people are buying homes today is to maximize the amount of debt. I'm going to show that and prove that to you today. There is a problem here when real wages are going down, but everything that you have to buy is going up. This is all because of what the central banks are doing, and I will never, ever stop talking about that. For the 14th straight month, the federal government spent more money than it received through taxes. They give you the numbers in here, but it's just shocking to me. Connected with that, you could see federal spending sets record through November, deficit second highest ever. It gives you the chart form at the bottom over here. The spike that you see in this chart, it's of course financial crisis time frame. We are going right past that entirely, but you see the trend line. Regardless, there is more debt being pumped into the system on all forms, whether that's the QE, whether that's everything that they've been doing, the deficit spending and so on. Look, it's a mess and there's no possible way. Mathematically, there's no way to get out of it. So what do? There is only one option that many have been talking about, and that's QE, but specifically you want that to be dropped from the sky and just hand it out everywhere you can. And then, of course, when you see it from the air or from far away, it doesn't really look like money. Kind of looks like confetti. I'm not going to get into all the details of this article. I just want to mention something really quickly. It's talking about New York and the fact that they're at record levels of homelessness, but look at most major cities. They're dealing with roughly the same thing. This is all because of what we have seen and in the system that has been underlying it. Look, the banking system was created to siphon wealth away from the middle class and into the hands of the few. You have the central banks, which are devaluing the currency intentionally. They're creating inflation to basically ensure that there's always a whole bunch of people at the bottom and a few at the top. The debt-based system enables banks and, let's say, wealthy people, the establishment, all of the bigger institutions, to create money out of thin air by loaning it into existence, by creating that. And then you have the average individual, which borrows money to buy the things that they need. So they are borrowing things to buy their car, they're borrowing things to buy, whatever things. Sometimes they're buying iPhones and whatever it is. That shows you the difference in the situation. I'm trying to make myself clear around that point of how debt is used for one side versus the other. It's not a good situation for the average person. I told you about this and some didn't believe me, but here are the statistics showing you this directly from global news in Canada, specifically the GTA, the Greater Toronto Area. There's no bigger bubble anywhere. $1 million mortgages common now in the GTA. I want to highlight this once again. $1 million. $1 million. Okay, that's Canadian dollars. It's still ridiculous. 2020 has been an up, down, and up year for real estate in the GTA. Demand for properties initially dropped. By spring, that had been a turnaround, and now prices are up, and so is debt, as brokers are seeing more $1 million mortgages than ever. This is absurd. There is no reason why this should ever happen, but here we are, and the expectation for 2021 in the GTA, guess what direction they're claiming it's going to go? Absolutely, it can go here. You've got a mortgage right now with HSBC, I believe it was, 0.99%. So people are going to take that. They're going to jump on that because they want to get in now. Next year, the houses are going to be more expensive. Next year, the houses are going to be more expensive. And the fear of missing out is really pushing people to take on way too much debt. Interconnected with that, property boom drives a surge in Canada household wealth. If you look around the world, you see the percentage of how it's broken up. Let's say on a pie chart, if you were to take the average person's wealth, you might have, this is real estate, as in their primary residence. Maybe this is their savings in the bank. This is their, let's just say whatever. Anyway, you go around, and that division depends on different countries, depends on different cities, and so on. But in Canada, the majority of people's wealth is in their home. That's why I think it's the biggest concern, because you're seeing a bubble forming. And what happens if that reverses? Of course, you're going to have a lot of people that have been hurting, especially those that have been pulling out money. So that's why I always mention it and relate to that as seeing the extremes of a bubble and what can happen. All right, here we go. Sub-zero rates, club swells with Spanish debt and Australian bills. Australia sells 3-month Treasury notes at low yield of just under its 0.01 in the negative. Average yield on Spain's 10-year debt auction is below 0%. You go down, they show you more info. Look, $18 trillion worth of negative yielding debt exists today, and it seems like that's continuing to grow. Portuguese 10-year bonds rallied to send their yields into negative territory this week, and it just goes on. I have some more information there, but it just boggles my mind to see what has happened to the currency and to the financial system just over the last few years. So here is the heat map, the Eurozone sovereign bond yield heat map, and I know the font is really small. I'll just describe it to you really quickly. On the left-hand side, you're seeing the countries here, and then it just gives you the actual different, this is the 1 month, and then you go all the way across to the 100-year bond. Everyone loves those. But essentially, you can see it for yourself, whether it is Germany, which right across the board, you see that red color, that's the first one on the list. Germany is red across the board in the negative. So pretty much everybody, except for one here, all the way across to the 5-year right now, every country is giving you negative on your bonds. Negative. You're going to get a negative yield on those bonds. That's what it's telling you. And for many of them, you can go across to the 10-year and the same thing. There are even countries giving away their bonds at a negative yield on the 30-year. It is absolutely ridiculous. It's ridiculous. And then you take Austria, which I believe I'm seeing the right one here. Austria 100-year bond at 0.46. That's it. You're going to hold that for 100 years. Of course, they don't hold to maturity, but the point is you're going to hold it for 100 years and you're going to get 0.46%. It is just absolutely absurd. Just a couple of charts here. You could see road to zero, average yield on the 10-year Spanish debt sold on Thursday drops below 0%. And at the bottom, Australia's 3-month notes see a negative yield accepted at auction. So it has been really just coming through the floor since the beginning of 2019. And now it is actually in the negative. Spanish 10-year yield and long-term proxies using annual prints gone into the negative. As you can see here, this is obviously going way back, but just look at what's been happening since 1980. All countries have essentially moved in the same direction. Annual Portuguese 10-year yield and long-term proxies using annual prints. Same kind of patterns that you're noticing since the 80s. Everything has been going down except for the sovereign debt crisis where there's a spike up, but that's been the trend here. China sells first sovereign bond at negative interest rate, taking advantage of record low borrowing costs to raise capital. They're just one more country to do the same. The ECB loves you very much, and they have decided to increase the amount of money that they're printing. Is anybody surprised? I know I am. I thought that they would stop QE and everything would return back to normal. Oops, nope, obviously not. You can see at the bottom here, they're just showing you their emergency purchase program is gaining here another $500 billion to a total of $1,850 billion. So that's $1.85 trillion worth. $1.85 trillion worth. And of course, that's not going to be enough, but that's what they're doing. They're increasing it by 500 billion euro, and we will see how long it takes them to get to the next step, in which they say we're going to have to pump it up again. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for being one of the 10%. If you want to learn how to sell stuff online, I'm talking about e-commerce, I actually teach you for free. Others out there, they charge $1,000. Their courses might be great, but you want to get your feet wet. You want to get up to the intermediate levels. You can do that absolutely for free in my course, the AmazonGPS.com. If you want to understand the financial system, you want to know the ins and outs, you want to ask the right questions, you want to manage your money, you want to be able to look at anything and understand what the basic concepts are, the fundamentals. Well, you can do that by reading these two books. Check it out at the link in the description. If you want the audiobook instead, it's available at themoneygps.com. Wait a second, have you seen this video yet? If not, you definitely want to check it out. A lot of good information. Click on it. I'll see you there.